Good afternoon, everybody. I see Anthony's here. I see DJD. I don't know that I've met DJD, at least not as DJD. So as always, feel free to put on your camera and let's see your smiling faces, unmute yourselves, and we'll have a informal discussion. I went ahead and started recording this discussion tonight because normally I don't record the lab meetings that we have. And the reason why is because I want people to feel free and safe sharing questions or comments or thoughts about their own projects. And in recording this, I'm a little bit sensitive so that you don't feel like you're sharing your project with the world. However, the past few times that we've done labs, the conversation, the questions and the conversations have been more generic, less project focused. And we have in fact had such good conversations that some of the folks have kind of regretted that we didn't record them for future reference. So I'm going to go ahead and start recording this one. But if anybody feels a little bit shy about talking about their project, if that's what's coming up for you, you let me know and I'll be happy to pause the recording until we've talked about your project. And then, once we've passed on that part, then we can record again or something like that. So I thought we'd try that this time, try something a little bit different. And that way we can see if we can capture some of the more educational components of these conversations. The other thing that I was going to mention is that Jody Ashton had requested that we allow her to, actually I asked her, but ask her, if we could have her moderate these lab meetings. There she is, in fact. So once she gets on and gets established, I'm going to turn the time over to Jody and let her run the meeting. And so she might be here. We might be just a second. There she is. So hi, Jody.
Hey.
So I was just explaining to everybody that I started out recording this, and the reason being is because in weeks past, when we've done labs, a lot of people have regretted that I didn't record it. And of course, in the past, my philosophy has been, because this is a lab and people are working with their own issues and their own projects and whatnot, I didn't want them to feel unsafe in sharing some of their ideas. And so I wouldn't record it for that reason. But so many people had come back and said, gee, I wish you'd recorded this. And so I'm going to record it. But if anybody wants us to pause the recording so that they can talk about their project, we can do that. I'd be happy to do that. So with that, I'm going to shut up and let Jody take it away.
Well, hello. Mark and I had kind of talked about taking turns on every other week, and I was not prepared that this was my week. So, yay!
Surprise!
We get together and talk about things that are going on. Surprise! Yay! Just things that are going on, and we talked about also. Mark, some of the ideas we had, we're still going through and doing the kind of what we did last year where people can practice pitching and just kind of an open general discussion, I guess. Is that how you see it going, Mark?
Yeah, whatever the group wants to talk about. This is kind of a mastermind or a lab or something where we can take the weeks that we have a technical discussion and apply the things we've learned to our projects. And then in this week, we use that time to talk about the project or ask questions or say, this is my stumbling block, or help me get to my next level, fill in the blanks. But this is the week that's for you guys to work those kinds of things out with the team behind you. And yes, do pitches.
Well, one of the things in the thought process that I had in regard to recording these is it's fine to record them, but maybe they're only shared with the people that are here
We could do that.
and not shared with the community. I don't know how everyone else feels about that. Thoughts? Because I know that sometimes people don't want all their stuff out in the community,
Mhm.
but yet if you're here, then you're obviously wanting some help, and then, but I don't know what everyone thinks about that. I think you can do polls, right, on the
I think
school
so.
website?
Yeah, I think you can. And
Maybe we do a poll.
okay. And also, just so that you know, I've got a YouTube channel set up for these recordings, and I can make a recording like this one private so that only the people who have the link that it's sent to can see it. So that's how we can make it available to just those who were here.
Right.
So yeah, that would work.
And
This is Dwayne. I like that idea of
Okay.
the people that are on the call.
Dwayne, I didn't recognize your initials.
DJD, Dwayne Joseph David.
Yeah, I would have recognized if you put Dwayne on there.
Sorry about that.
That's okay.
I'm so used to going to a Zoom meeting where there's people I don't know. I just do the initials.
Okay.
Sorry, I just have it. I was on
Not
two
a
today,
problem.
so
Not a problem.
well, I have printed out Ben's white paper that he just published out on the community, but I've read like the first page.
Mhm. Is this the one
Does
we were talking
anybody-
about last week?
Yeah, I think so. You and me?
Yeah.
Yeah. Yeah, I don't know. Has anyone else had a chance to peruse it?
not
Or
yet. I
use,
went through the first one, and then he edited it for it sounds like a lot of confusion, or enough confusion. So I haven't had a chance to read his updated version.
Yeah, his email about that was kind of funny. And
If
I
you're a
meant to
spreadsheet geek like me, it's going to be a lot of fun to translate.
Well, I just am curious because, this stuff's so complicated and no one, well, it appears complicated to the lay person. And people don't think about this when they're investing any sort of risk or risk adjusted returns or
Mhm.
anything like that. And when we have studied Ben's Adagio fund compared to, the S&P and all that, I mean, it's night and day. Like,
Mhm.
I don't know why anybody would put their money in anything other than Ben's stuff.
Right, right.
So I'm just curious to see how, more understandable this is in the white paper. Because it's looking like a lot of formulas, Mark.
Mhm. Yeah, I saw it. I was reading those. So that's what I'm saying. If you're a spreadsheet geek like me,
Uh-huh.
then, I can go in there and start playing with those formulas. So
Yeah, I'm looking
it'll be a lot of fun. For those of you guys who don't know, what I did was I took a lot of Ben's formulas in the book and in the course, like the formulas that I think are on page 92, and there's another page where he's got a whole page of comparative formulas between the risk adjusted returns of Adagio, for example, versus Standard & Poor's. The S&P 500, I guess is what I'm trying to say, or real estate or something like that. And I've gone out and looked at those formulas and duplicated them to just help me understand how they work. So anyway, yeah, so it'll be fun.
Yeah, that'll be interesting. I'm gonna have to go
just
look
to-
all this stuff.
Yeah, now as a side note, maybe this is the main thought and that's the side note, I don't know, but CJ wrote a question today that I thought was very interesting because we were commenting he was commenting in the community about risk adjusted performance. And he sometimes asks some very thoughtful questions. And the question he asked was, what if we could take risk adjusted performance measures and combine it with artificial intelligence, okay, and come up with some software? And I hated to burst his bubble, but I said, it's already been done. It's already been done. That is BlackRock's claim to fame. That's what has made BlackRock a $10 trillion asset manager, because they developed a little system, and you're all going to recognize the name, Aladdin. And the system is risk adjusted performance measures combined with artificial intelligence. And they developed this probably, 25 years ago. And they've been selling it as subscriptions to all the big shadow banks and commercial banks around the world for, billions of dollars. I mean, a subscription to Aladdin for, one of those banks is tens of millions of dollars a year. And so, yes, it's been done. Now, I further answered CJ with this challenge. And I'm saying this because I just wrote the answer about 30 minutes ago, so it's fresh on my mind. But if any of you guys are software guys or engineers or want to work with software engineers, BlackRock is targeting a niche market, okay? And their niche market is requiring that essentially, I won't go into a political commentary, but I'll just say this much. They're enforcing green policies upon their financial relationships with their companies. In other words, the message is, CEOs, companies out there, if you want BlackRock to invest in you financially, if you want any of our money, you're going to have to go green. You're going to have to follow. Oh, somebody's echoing. My voice is echoing with somebody. But anyway, you're going to have to follow our green policies. You're going to have to incorporate, if you will, the Green New Deal as it comes out from the federal government into your practices and policies, or we won't invest in you. So the point is this: they're going to reach a portion of the market, and then there's going to be a big portion of the market that's either unserved or underserved by BlackRock. And so if you were to develop a, say, von Mises version of Aladdin, which is more libertarian in your financial policies and scope, there's a big market out there that would probably want to take advantage of that. So I'm just saying, if you want to have a fund that invests in that kind of strategic software development, you got an opportunity, because they have a corner on the market right now, but they don't need to have it forever.
No,
Well, and I
they
think-
announced a couple of days ago that BlackRock lost $1.5 trillion last year. So,
Wow.
and then I haven't seen. I saw a headline this morning that was, and I just looked at the headline, and I want to say, I think it was on Bloomberg, but I look at so many sites I can't say to that. But it was Larry Fink. The ESG investing has grown nasty and personal, something to that effect.
Yes, I saw that same headline. Yes.
Did you? Okay. Yeah. So, but they lost a lot of money last year. I know like 6 or 7 states, including Louisiana, which is where I am, they pulled their funds from BlackRock because
Florida
of this
did too.
ESG
Yeah.
crowd.
Yeah. The big one last week or the week before was Florida announcing they weren't going to put their money with BlackRock. That's my point. If we can come up with, or if somebody in this community wants to come up with a von Mises version of Aladdin, you'll pick up these pension funds all over the place. These red states will leave the banks that have BlackRock or Aladdin and come to us. And because it's all political at that point. They don't want to be sitting there being threatened by BlackRock.
Mark and I were talking about that just from a marketing perspective. with the fund that we're working on, because it's such an underserved, not everyone wants to put their money into this and have their money going to something that they don't believe in.
Yeah, yeah.
And there's no real alternative.
So that's the
Except us.
idea. That we are the alternative. When you think about it, we are the alternative. Ben,
Right.
his economic and political economic philosophy is in sync with von Mises and Hayek and the Austrian School of Economics. And so that's why I said, if you've got a von Mises version of Aladdin, we wouldn't call it Aladdin, of course, or we could call it Aladdin von Mises style. But if we did that, you would pick up the other half of the market that's not getting served by BlackRock, and people are pulling away, just as Dwayne mentioned. And so they've got to have a place to land, and we're it. All of us.
Well, and there, Mark and Jody, I don't know who MASG is, but do you know who Martin Armstrong is?
No.
He's one of the foremost investors, economists in the world, and he actually started his international annual meeting before Klaus Schwab and the WEF. It's kind of like the way California and Washington State go back and forth on DUIs. One year one's tough, the next year the other's tougher. Those two, Klaus Schwab and Martin Armstrong, have gone back and forth. And
Is Martin Armstrong
actually,
in the same school of thought as Klaus Schwab, or is he opposite?
No, he's opposite. He's the exact opposite.
Okay,
and he
good,
just had
good.
his
So he's a good guy.
He's a good guy. He's a real good guy.
Right.
But the reason for bringing him up tonight is that he actually has clients out of Europe with $1 trillion portfolios. This is his quote, and I've never known him to BS, and I've been following him for about 12 to 14, 15 years.
You're saying he's not given to
said he's got-
hyperbole.
No, he's not. And he's got clients that are contacting him out of Europe that have $1 trillion portfolios that are begging him to put together ESG investments to meet the political criteria of the European commissions. And he said he cannot put anything together that actually makes a profit in the ESG arena and the green arena.
Really?
Yeah.
Wow.
That's a paraphrase quote. It's close to his quote. I heard him say this like 3 or 4 weeks ago.
Okay, get your funds of funds set up, guys.
Indeed.
Yeah.
Get your buckets ready. They're going to fill up.
Yeah, but why? I'm curious as to why these clients is it because of the guidelines of the EU, or is this their personal investing philosophy that they
No,
have
it's
to-
for the politics. It's to satisfy the political criteria that Europe is demanding of their that people put their money into. They're trying to buff out. There's a reason that Germany is freezing. There's a reason that the entire European Union is freezing. And Trump, when he was in office, actually warned Germany not to rely on Russian oil and gas. And they laughed at him and said, "Hey, you're crazy." Well, look where they are today.
Look what's happened.
Right.
Exactly.
So, but he said that the people in Europe are trying to, they need to do it for political cover for the ESG and the green stuff,
Wow.
the sustainable development investments.
Yep.
And can they, I guess, are there limits? I don't know anything about investing in the EU or outside the United States, so I'm ignorant in that, but are they required to keep it there in the EU, or can they move it
No,
anywhere?
they just need to be able to say that they're in those type of investments from what I gathered. Now, I haven't done, in-depth research on it. I'm just going by what Martin says and how he said it. And he said he can't find investments for these guys to put their money into and make a return.
Well, it's interesting
Okay.
because part of what Mark and I are working, the basis, I can't speak for Mark, but my big why is to do social impact investing. That's what the fund's all about, primarily in education. So it's it is social impact, but I guess I'd have to figure out what their definition is of social impact investing. We probably should look at that, Mark, and see
Yeah,
if
I think we all should.
and see if there
Well,
is
and I came across a group this week that I'm going to do more homework on them. They've got offices in like 6 or 8 cities or so around the country. And I think it's called Stonehenge Investments.
I've
They've got
heard
an
of them.
office here in New Orleans. And the only reason I triggered on them is because on the Sunday paper, they had a couple of guys or one guy in their office got a promotion. And so I did a little homework when they said Stonehenge Investing. Let me see, I got to get this out of the marketing. And anyway, they use the term on their website. They wouldn't give any returns like Ben publishes when you're once you've gone a little bit deeper into his studies and his programs.
Mm-hmm.
But they use the term risk-adjusted investments.
Mm-hmm.
Which I thought, yeah, it's Stonehenge Capital, and it's stonehengecapital.com, but they use risk-adjusted investments on their website, and I was going to call their offices soon to see, and they're doing this is what it says: our direct investment business line provides debt and equity financing to growing small businesses with an emphasis on underserved markets. So they do minority investing. Our investment. Yeah. So, and then they do transformational capital is what they call it, to operating businesses and delivering risk-adjusted returns to investors using a variety of financing tools, including national senior debt focused on small SBIC, small business investment companies, and series of state targeted growth capital funds and participation in new markets tax credit programs. And I had never heard of the state targeted growth capital funds, but I'm familiar with the SBICs and the new market tax credits.
Right.
So,
Mark, this is that group
they're
I was
trying all
talking
this
about.
and have been for like 20 years or so. So they've got to be pretty good at it.
Mm-hmm. So let's
But
backpedal
maybe
just
that's
for a
something
second, because Dwayne's bringing up a really good point, and Jody is getting to a really good point because I know where she's going. But something that we all can acknowledge is that the risk-adjusted performance measures is not anything new in terms of the concept. In fact, the specific analytical ratios and measurements that Ben teaches are not new. I mean, they've been around for decades in some cases. What Ben is proposing that's new is that it becomes standardized so that everybody uses them to complete their due diligence and their underwriting requirements, number one. Number two, the other thing that he's done that is new is that he has put a combination of them together to create I think it's called the SARR. I don't quite remember what the term was, but basically it's the Summers Adjusted Return something or other. I don't know if that's the right name for it, but that is new. That's his proprietary approach and measurement, because what he's done is by taking some already established measurements and ratios and combining them in such a way, he's created a measurement or series of measurements that captures the risk at the 4 points of risk. There's the kurtosis and these other terms that I'm still trying to remember. I'll probably get my head around them later on this spring. But the 4 moments of risk in the transaction, that is new. Okay, but what he's done is he's taken 4 or 5 concepts that aren't new and put them together in a unique way. And so we need to understand that.
But I think the issue, Mark, is going to be, why the big institutions and all them are not doing that.
Mm-hmm.
How do they look? How do those investments look? Bad.
That's right. And most people,
and so
most people don't understand
wins,
it enough to have the discipline and the rigor to see that it gets done. So that's those places that do, they talk it up. BlackRock talked it up because they did it. Stonehenge talks it up because they're doing it. And so's Ben, and so do we. And so, we don't have to know the math. So that white paper, you don't have to memorize it. You might want to be somewhat familiar with it in concept, but you don't have to memorize it. And you certainly don't have to memorize the formulas. All of the formulas that Ben uses so far, I have been able to find in my spreadsheet. I don't even have to worry about the math and the formulas there. Just know what they mean, how to interpret them, and then when to use them on your spreadsheet if you're wanting to reconstruct something on a spreadsheet. So, it's basically knowing how to build a spreadsheet. It's not as difficult as it might sound. So anyway, but I'll go back to you, Jody, because you were taking this some direction and I hijacked it.
Oh, I don't even remember where we were going, but it was a nice segue into, I think we were on the Martin Armstrong ESG.
Yeah, that's right.
And, thinking kind of outside the box of how do you make something. I mean, if there are people clamoring with trillions of dollars, it's like Ben always says, right? There's a way.
Yeah,
you just have to figure it out.
And that's more of the
marketing answer is
side.
Always yes.
Yeah, that's more of the marketing side of our funds. We can do some marketing, cooperative marketing things. Dwayne has come up with some really good contacts and some ideas. I know Frenchie has. There's others. Maybe it was John. John, were you the one that was talking about having some connections in Tennessee? I don't remember.
That is correct. And
that was you. Okay, I wasn't sure if that was you or Frenchie, but.
And I also want to acknowledge again the insights that were shared by Dwayne a couple of weeks ago. I wasn't there last week, but I did attend. The bags under the eyes are straddling time zones, both in Africa, Europe, and here in the United States. But Dwayne had identified an opportunity that he had literally run into Christmas. And today was a legislative breakfast here in Crossville, Tennessee. We had both our congressional representatives, our state legislators, senators, and representatives, as well as the Speaker of the House. And the points that Dwayne had made about looking at the opportunities to plug in appropriately. While I didn't have the chance to do the homework on the front end, it was great to hear a sense of what is being put together for this legislative session and some of the gap opportunities that exist there. So again, I just want to really punctuate that point. Again, I'm new, obviously, to being here in real time, but I just wanted to, again, thank Dwayne for the insights that he had shared as opportunities for us to pursue. He
shared some great insights, and so we're all loving on Dwayne today. But I just got to add here that Dwayne had done some wordsmithing on some materials that came from Ben, and has probably produced one of the best succinct explanations of what alternative assets are, and particularly from the Adagio perspective, that I have ever seen. We use the metaphor of calling them the airbags. I've found some language that I'm using in our private placement memorandum as well, along with what Dwayne wrote, because I think from a technical standpoint, we're starting to get our head around what these things really are, number one. Number two, once we understand what they really are, we're now in a position to better market them. And so I thank Dwayne for the work that he's done in that area, as far as, again, putting words to this that up to now have been very difficult.
Dwayne, did you share that in the group?
He shared it with me
because I'm special.
I shared it with Mark because I figured he was the best one to read it for me to get edited before anybody myself. You know, but part of why I asked Mark and to look at it was how I present myself as independent associate versus not part of Adagio, but representing the Adagio brand and having access to whomever we need as expertise within Adagio and its sphere of influence to be able to satisfy even the hardest nosed investors with the biggest egos and the biggest questions, you know, like no chance, you know, this is BS sort of thing. And to be able to overcome that. And I haven't pursued the state guy I met on Christmas Eve because I needed to have something, and I don't use the word need very often, but I needed to have something to send to him that he could understand as a layman, but also share it with other mini ticks, bloodsuckers. So, you know, we never take words apart, but most people don't. I do. But anyway, so now that Mark has blessed it, and I will go back and look at it again from the wordsmithing on the risk adjusted again. But at this point, I think it's strong enough, and Mark, to actually send it to other people to start opening conversations is the purpose of it.
Absolutely. You know, and there's another facet to this that I'm going to add. And in fact, when I publish our PPM draft up in the community here, probably in the next week, you're gonna see it. I'm gonna highlight it, in fact, because of the language that I've added. But I wanna talk to Ben about this a little bit more. And normally I don't feel the need that I have to, but maybe I will. I don't know. Maybe I won't. I'll just put it up there and let him and Carl pick it apart. But basically, what I did was I presented Adagio. So we have our own fund. Jody and I are putting together the Omega Fund, private investment fund. And what I'm doing is in that PPM, I'm introducing Adagio as a partner, a strategic alliance or a strategic partner that we're using to provide two things. One, a protective shield, and I don't think I use that word, but now that's the only word coming to me. But it's like describing the airbags on a car, right? It's a protective shield that you put around the funds that you're investing in so that regardless of how your funds do, let's say you do all of the underwriting that you can do, all of the risk adjustment measurements and you know, the back testing and everything that shows risk adjusted returns, it's a go and you do it, and then it, for whatever reason, underperforms. Well, if that's the case, then these Adagio protective vehicles, these protective funds will ensure our investors get the return that they get. And I talk a little bit about how that works, given Dwayne's description of what the risk adjustments are, the risk adjusted returns are, and how that works. And in fact, I even go so far as to talk about how it's a fixed income vehicle wrapped around an index of an option around an index. And so, you know,
it's like that.
It's like that. It's not exactly that, but it's like that because Ben said that. It's like that. Right. So, so a combination of Dwayne's language and a combination of my language sets it up. And then another thing that Ben has offered, and so I went out on a limb here and added this, but he talked about using insurance wraps. Jody, something you said the other day reminded me of this. And so, you know, using insurance wraps to guarantee principal, and, you know, maybe guarantee principal with a modest return. So essentially, it's the closest thing you can get to saying this return is guaranteed, and be able to say it without saying it, right?
Mhm.
Because the minute you say it, you're now violating bank regulations. So you can't say guaranteed, but you can word it in a way that people go, oh, I'm protected. I've got this insurance, these airbags that will, quote, I'm going to put the words in my own mouth, guarantee that my money won't be lost. And so when you,
So I have one thing to interject here real quick, Mark,
yeah,
before you go on. You're saying, because I've always thought of it and I've kind of been presenting it as like Ben is part of the fund, like
mhm, yep,
team,
yeah,
me, Mark, Ben, whoever else,
right.
is the team. And I have been trying to not mention Adagio by name so
Mhm.
that there's not that confusion.
Yeah,
And
what
if-
I did was I introduced it as a third-party strategic alliance. So even though you can, because Ben has said you can use me as a team member, right? You can put me on there as somebody affiliated with your team as a technical guru. So what I've done is I've said, okay, we're going to have Ben here as a team member, as a technical guru, but we're also going to introduce Adagio as a strategic alliance because we have that. We all have that. If you're going to invest in Adagio's structured products, that makes you and it puts you in a strategic alliance with Adagio. And so in disclosing to investors who you've invested with, what investments you've made, what funds you've invested in, you're disclosing Adagio anyway. And so that's when I got the idea, well, let's just tell everybody right up front, Adagio is a strategic partner of ours in whom we are going to be putting a very high percentage of our dollars into it to protect your investors' principles and even provide a modest return outside of what we're hoping to accomplish with our fund. Now,
Dwayne,
More
is that what
precisely
you're doing?
assure your investment returns.
yeah, exactly.
Is that
More
what, is that how
precisely
you're writing? it?
assure. Sorry.
I was
thinking
just
out
asking
loud.
if that's how you're writing it, Dwayne. Is that how you wrote up your
Well,
documents?
I'm listening to Mark talk. Oh yeah, I just need y'all's email addresses. It's in 2 Word docs. I don't have a website that it's linked to that y'all can go download it, but I'm working on the website. So I just need y'all's email addresses and I'll send you the 2 documents in Word format so that you can change it to your personality if you'd like.
So you can all
My
put your
email
email
address
addresses in the chat.
Yeah, I can do that right now or shortly. Mark, when the last conversation or the webinar that Mark came into that didn't get that Ben came into that didn't get recorded right before we took the Christmas break,
Right.
wasn't he talking about this insurance product as the preferred, treating it, describing it almost like a preferred share, where you were
Preferred return?
capitalizing returns?
Yeah.
That's what that's the part that I wanted of that whole conversation that I just wasn't able to take notes that night.
Okay, well, let me see if I can be Ben here for a second and give you an idea of what he was doing. What he was doing actually was creating the instrument that you give the investor who's putting money into your fund. Okay, so whether you put insurance wraps or anything like that into the fund to protect their investment, that's a whole nother matter. But what he was doing was structuring the vehicle that you were going to offer the investor. And in this case, what he was suggesting, he actually has kind of migrated from the idea of doing a limited partnership with limited partnership shares to an actual LLC with membership shares. And these membership shares are issued in a form that mirrors preferred stock. Okay, and if you're familiar with preferred stock, there's some characteristics. First of all, preferred stock is, as it's named, preferred, meaning that as you liquidate the fund, you're going to pay off all the preferred stockholders before you pay off any other members. So if we have membership shares that are not preferred stock, so that's what management would get, management shares, they wouldn't get their shares liquidated until all the preferred shareholders are liquidated first. That's why it's called preferred. However, that comes with a price. Here's some of the prices. Because it's stock, if the fund were to go belly up tomorrow, and I'm not anticipating that would happen, but hypothetically, if it did, they don't have a claim, a creditor claim on you in a bankruptcy. In other words, their stock is just like common stock. It's not gonna get paid. Now, if there was a bankruptcy, they would get paid before the common shareholders got paid. But if you're in bankruptcy, obviously the common shareholders probably won't get anything. But your creditors will, and then your preferred shareholders are right behind your creditors. So in other words, they're kind of this middle ground between creditors on one side and common shareholders on the other when it comes to their ability to get paid back. So again, the good news is from a common stock perspective, if you don't have the money, you don't have to pay them. If you don't have the money to pay them dividends or interest, you don't have to pay them. Okay. In that sense, they act like stockholders. However, this is non-voting stock, which means they cannot take over your company like, a common shareholder could with the same class of stock that, the management have. In this case, it's non-voting. It's non-cumulative. He was emphasizing that point, that it's non-cumulative, meaning that if you miss a dividend payment, if you miss paying interest or something to that effect, if you miss their coupon rate, and I'm going to talk about that in a minute, then that doesn't accumulate, that they'd have to eat that. And let me digress just a minute to mention what that means. Preferred stock comes with what's called a coupon rate, which means it's just a stated rate of interest, okay, that comes with the stock, meaning that instead of a declared dividend or sharing of profits or something to that effect, every year, if it carries a coupon rate of 10%, you pay 10%, right? And like I said, if in this case, if you miss a coupon payment, then that's okay. It's non-cumulative. It doesn't build up. It doesn't accrue against you. You just say, oops, sorry, we missed it, and that's the risk they take with the stock that they're buying. On the other hand, it takes on some characteristics of debt. Okay, so it's not actual debt, meaning that if you miss that coupon payment, they can't come in and foreclose. They can't come in and demand repayment of their money or with interest or anything like that. So essentially what it means is, if you think about it, it takes on the best characteristics of stock and the best characteristics of debt without the weaknesses that come with the stock and the weaknesses that come with the debt. Okay. And so he was strongly recommending that as we look at setting up our funds here, that we consider migrating from the old limited partnership model to an LLC model, issuing member shares, but with a preferred stock characteristics. In other words, they're preferred membership shares with those characteristics built in. And so that's in a nutshell what he was talking about there. I think it's a great idea. I'm planning on doing it with Jody here and going to that format.
And because to the fund, it's kind of like you said, Mark, like a loan, but
you don't have to pay it
without
back.
guarantee. Yeah, right.
You don't have to guarantee to pay it back.
Right.
So that's more, sounds like, as I've heard this from you, Mark, it sounds more like it's geared more towards the return on the investment than the actual principal amount.
Yes.
So with the guarantee, okay, good on that. Then more towards the quote unquote insurance on the principal is an index with an option around it. So you could literally take enough money. The options are relatively inexpensive. So you could take the index and do one option as a call and then do another as a put, which covers you either way.
Yep. You're starting to get it. You're starting to get it.
I got it.
So let's do
That
a
is
specific,
like,
let's
oh
do a
my
specific
gosh.
example. Let's do a specific example. Now, I don't know if Ben would touch this example with a 10-foot pole in a million years, but it's something that we all can get our head around. So let's just try it on. So what he's saying is we're going to create a fund. So those structured products are funds, okay? In case anybody didn't realize that. It's a fund in itself. That's why he's saying make a fund of funds.
Funds.
So you can go ahead and buy into the fund of these structured products. So it's a fund. And what the fund is made up of, let's suppose that it's an investment in the S&P 500. Okay, that's an index. Okay, and you can go out and literally buy shares in SPDR, right? The SPDR index. So instead of buying shares now, what we're going to do is we're going to create a fund for which we issue fixed income, a preferred stock share. Okay, that's the fixed income instrument with an option, which is the SPDR options against an index, which means the whole S&P 500 would have to go down for that option instrument that you've created to go bad. Now, to Dwayne's point, if you hedge, you literally create a straddle on that option. Okay, I'm getting into some technical financial stuff, but there's a thing called a straddle where you essentially are limiting your downward risk and still creating as much upward potential as possible. Using the option, create the fixed income product. I think we've pretty much identified all the working parts of what Ben's doing. Now, do we know what the actual structured product is? No, not exactly. Okay, I don't know what option he's using.
We have
I don't know.
ideas.
Yeah, you can get ideas of what the index is and what the option is, but the bottom
Well,
line
and
is,
I know that they were bringing in, and I don't know where they're at with this, and I haven't asked Ben. Mark, maybe you know, or maybe someone on the community here knows, but at one point he was looking at bringing in Stefan's real estate as part of it, because in their group, I mean, like Stefan has 2 million people in his network. And I can attest, because I did talk to them. I was helping them out with a little something, and the people, he had great leads, great contacts. I got people on the phone, but they wanted to know what it was. What
they
are you
were all
doing?
real estate people.
What's the
Ben
deal?
Ben didn't have a whole lot of positive to say about him.
I'm like, giving my spiel, and they're like, but what's the deal? And I'm like, oh my gosh. Oh my gosh. So I think they brought in some of what Stefan's doing into that same concept so that they could say it's real estate. Here's the deal.
It's real estate. So yeah, we could, to your point, go back. Let's not do an S&P 500 index. Let's do a REIT index. Okay, the REIT index. That's all real estate. So it's a real estate index. We buy options on it. We create a spread, and then we use that and then issue fixed income instruments against it. Okay. In theory, it's like what Ben's doing. Okay. So we've gotten really close to figuring out his secret sauce, which is okay. I really don't need to know his secret sauce. I don't much care,
Me either.
but I just need to know that it works. But the fact that we're getting our heads around it enough to at least have a general idea gives me a confidence level that what we're putting together is real. It's very, very real. And so when you take a step back and you think about this in the big sense, like Dwayne's talking about with Armstrong in Europe, okay? Let's suppose we're all here. There's 6 of us here on the call right now, 7 of us, I don't know, but let's suppose we all put together our funds. Okay, we got 3 or 4 or 5 or 6 funds here. And now we somehow can, use Dwayne or John or somebody, and we penetrate the network of Armstrong and we go, hey, we've got all these funds. And they've all got these asset protection measures built into them to ensure the principal. And now we can take capital into these funds, and lo and behold, let's do this. Let's act like an international monetary fund and direct our investment to private equity in sub-Saharan Africa, okay, where they need economic development. Now, every economic development dollar that goes into there, we control, as opposed to, turning it over to a government or something like that, okay? One of those funds could be a microloan fund. That's all it is. We're making microloans. All right. But those microloans are now practically guaranteed. Okay. Again, I'm going to use that concept because we've got 50 cents on the dollar in protection, including with insurance wraps. And now we can take the other 50 cents on the dollar, put it into a microloan fund, and we're guaranteeing our European investors a fantastic return.
But
Not
that's
to
what,
mention the
as soon
fact
that Martin, I was planning to talk to Martin about this once I had a little bit better grip on this and making progress. These meetings help a lot on Tuesdays.
Okay. Well, I
Believe
hope
me.
this is helping you kind of create a vision here that can
Well, and-
happen. But they're going to
And Mark-
need every fund our community can build. That's the exciting thing. Every one of us can build as
So-
many funds as we can to create the buckets to make this happen.
Well, and one of the things that I'm getting ready to talk with Ben about, and I shared this briefly with Mark, just to kind of get you guys' juices in your brains thinking, because I'm in the process of hopefully, please God, selling one business, but I'm under an LOI on another business, and this business happens to have over $10 million in customer deposits. And if I can get this all to work, and it's a big if, I'm looking for some equity partners and things like that right now. I've got the biggest debt portion of it, I think, figured out. But I'm going to be having a meeting with Ben, but this is exactly the kind of stuff he does. We're going to move that over to Adagio and, do some sort of, like Mark saying, the insurance wrap and that, but then also creating a credit facility so that money can stay. But as I'm needing those customer deposits to do what we're doing with it, in the business, it doesn't affect the fund and that money keeps growing. So that's another idea, is if you're seeing things like that, these little tidbits of things that he can do, and this is all private, it's in the private equity world. There's any number of things that Ben can do, I guess.
So here's
just
the
be
bottom
thinking
line,
on
guys,
that.
and I hope we all take this away from this meeting tonight. All of us, we've got to get our funds set up. Okay, so set your fund up, get your legal entity set up, get your operating agreement done, get your PPM done, get your subscription agreement done. Set up your pitch deck. Your pitch deck is just simply saying, this is my vision of how I'm going to run this fund. Get those things done, because right now what we all need as a community, and what Ben wants to accomplish, is he'd like to have 10 of us, 20 of us, 100 of us all set up with our funds. Okay, the fund is set up and ready to go. It doesn't mean there's a single dollar in any of them. Okay, but we got the fund set up. It's legally compliant. We've done everything the way we're supposed to do it. Okay, that doesn't have to take a long time. We could have, all of us here could have our funds set up probably within the month. Okay, if not by month end, definitely by February end. Just getting the documents done, edited. And that's because our fund, Jody's and my fund, and Toby's fund, and John's fund, and Dwayne's fund, although they're all going to be very different, they're going to be fundamentally the same. Every one of them is going to have an organizing agreement. Every one of them is going to issue preferred stock. Every one of them is going to have a subscription agreement, a PPM, and so on. Okay, you're going to establish your waterfall the way you want to set up your waterfall. All of those pieces and parts are what's easy to put together, and we just need to get it together and do it, right? Then, as we're talking about, all right, now what are we going to do with these funds? Okay, if you set them up as a fund of funds, then essentially you can then begin to start attracting capital into the fund. And you know that 50 cents on the dollar is going to go to Adagio and structured product, and 50 cents is going to be available for whatever projects you want to fund. You have the power of the pen at that point. And so this is where we can now go to the state pension funds. We can go to Armstrong. We can go to capital groups like Jody's talking about and so forth, family offices or wherever, RIAs, and start attracting the dollars into our funds. And if we're working together on this, the way we're working together now and talking about this, then our Tuesday night lab meetings like this can be, okay, Jody, how much did you raise this last week? What did you do to do it? And John, how much did you bring in? And we know you're talking to the Tennessee legislature, how they coming, and stuff like that, so that we're getting ideas and now we're helping each other. And there's going to be a lot of mutual back scratching, if you will, because as Ben describes it, if you go back into the course, you'll see he talks about dollars coming into the network, all of the due diligence being done in terms of the risk adjusted performance measures, and then dollars coming back out through investments into the different investment asset managers, which means I'm going to bring dollars into the network and I'm going to be investing in John, and I'm going to be investing in Toby and Dwayne, and John's going to be doing the same thing. Toby's going to be doing the same thing. One of us is going to land Armstrong, and all of a sudden trillions of dollars is going to come in, and he's got to have places to put it. So, he's going to need a place to put a couple billion with the John, and a couple billion with Jody, and a couple billion with Tony, and so on. And so if we're all getting our funds set up and ready to go, then the buckets that we need to be able to collect this and make it work is going to be phenomenal. And so,
And I think the other point, Mark, that Ben said is you don't have to have a specific, I'm going to probably botch the words here, but you don't have to have a specific niche fund. You can simply be a fund of funds.
a fund of funds, and that's what he's recommending. As a matter of fact, he said, quit trying to create a fund that is niching you right now to a very specific purpose. Don't even say, I'm going to do a real estate fund, or I'm going to do a private equity fund, or I'm going to do a hedge fund. He said, don't even do that. Just say, I'm going to do a fund of funds. Leaves you wide open to do whatever you want.
And then the type of things that they invest in, I'm trying to find my notes, Mark, and maybe you can help me go back in my brain.
I have it written down in a different notebook, and I don't have it right in front of me, but yeah, he actually makes a list.
He lists out all this, of stuff that you can say they do, like real estate, mezzanine.
Oh, yeah.
Wasn't it?
Private equity. Alternative assets. There's actual terms that he listed out. There's about 5 or 6 of them. So when you're telling your investors, what is it you're doing? What's the deal? Like the real estate guys, you can say, I'm doing this, 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 and this. And every one of them then allows them to go, okay, I can see the deals. Okay. So it makes it, again, more investor friendly. And so that's the language you want to incorporate into your fund. So, we've put up on the community, I don't know if you guys have seen this or not, but in the community, I've put up documents, sample templated documents. I've put up, I believe, operating agreements. I've put up subscription agreements. Don't think I put up a PPM yet, and I apologize for that. I'm just now finalizing it. I've put up soft commitment letters that you can use as templates. So swipe all those documents, guys. They've been pre-written for you. It's almost a done for you proposition here. Okay, just swipe them and make them yours. You might have to do a little bit of wordsmithing to fit your specific situation. But what I'd love to see in these lab meetings on Tuesday nights is, somebody like Anthony coming back and saying, you know what, I've done my subscription agreement and I got this one paragraph and I'm kind of struggling with how to say this or that. What do you guys think? And he can put his paragraph up there and say, oh yeah, word it this way, and then he goes back and it's done, right? Those are the kinds of things that I'd like to see us get to, where we're literally working together to finish up the document package, the pitch decks, because you want to get proficient at explaining this and sharing this with people, so that when we do sit down with Armstrong, we can flash roll the guy like Orrin Claff teaches, and he's going to go, oh my goodness, I got to put all this money in your fund.
Here's $5 trillion.
Here's $5 trillion.
But one thing that I did too was that I went out to BlackRock's website, and Mark and I are literally going to reuse that term lovingly.
Swipe. Yep. I plagiarize with impunity.
May I friendly amendment? The phrase is inspired by.
Inspired by.
There we go. Yes.
There
we
you go.
were very much inspired by BlackRock's website, and they put everything out there. They put their
Yeah.
subscription agreement. They have
Mhm.
their 2-page teaser. They have their pitch.
Pitch deck. Yep.
They have it all out there.
Mhm.
And it's BlackRock, well, blackrock.com.
I've got all those
believe that's their
documents, and
website.
quite frankly, once I'm finished revising them, I'm going to put them up in the community. I mean, I'm already done the work for you. I should probably put my subscription agreement up there because I'm done with that. Jody and I just need to review it together, and it's done. I've got the operating agreement, and that's pretty much done. I just have a few things I need to tweak, and then that can go up. My PPM for our fund will be done probably, if not, well, let me be conservative. I'll say the end of the week. But that was, I'm a couple of weeks behind on that one. I was hoping to have all this done by the 31st of December, and it's just taken me a little bit longer than I hoped. But those are the main documents, guys. I mean, the subscription agreement, just to give you context here, is 17 pages long, and it's a lot of forms that they have to fill out. The operating agreement is about that
Was
long as
BlackRock's that
well.
long?
Yeah. In fact, I
It
swiped
was?
BlackRock's.
Okay.
Yep. Theirs
Okay.
was probably within 1 or 2 pages the same length. My PPM when I'm done is probably going to be, well, it depends if I decide to put financials in it or not. It'll be at least 50 pages when it's all said and done. So I'm handing you a big stack of legal documents when you think about it, that it will be made available to you guys. You're my beta test group. I really want to know what you think about it. Because one of the things I'm going to do to attract people into the community is I may offer these documents as a fund in a box concept where they buy these documents already prepared, done for you kind of a thing. All you have to do is more or less fill in the blanks and their documents are done. Especially if all they're going to do is a fund of funds and come into our community and work with us, which is what we really want to do. I mean, when you're talking about some of the things that Dwayne and John have mentioned, and we're talking about some of the big things we want to do to go up against BlackRock, and we're talking about, heck, underserved markets in emerging markets in Europe and elsewhere. Guys, we're sitting on the thing that's going to, 10, 20 years from now, we're all going to be going, what did we just do?
Remember those Tuesday meetings?
Besides save the world.
And I just,
Mark, I got a question on your investment package. Simply said, when I the few times I've raised equity going out to the market, we would do a business plan, which is the forecast of what that business is anticipated to do, which is the good news. Then the PPM is the lawyer side that says this is the bad news. You can lose everything.
Right.
And then the subscription and accredited investor docs are just kind of like, okay, you got to have them. So, but in this situation, and when you mentioned including financials in your PPM, when Ben goes out and structures his documents to raise capital for one of his funds, does he include like, this is why we invested in this one, and include all of his risk-adjusted performance metrics on going back to one full cycle on this particular investment? This is why we did this, and you show those formulas and results, but then you have language in your documentation that says, and we reserve the right to invest in the most lucrative asset class as they present themselves, and we may be in it for 6 months or 2 years.
Right.
Sort of thing.
So you've brought up like 10 different issues.
Well,
let me see if I can tackle them. Number one, there was an implied question in the first part of your comment that basically said, do we use the business plan and the PPM together? And historically, I have always put them together in the same document. Do I have standalone business plans? Yes, we could do that as a standalone. But typically in the PPM, I include both the legal and the business or financial and operational discussion that comes in a typical business plan. Whether I actually include the prospective financial statements or not is another matter. Ben doesn't like prospective financial statements. He likes back testing. And
Yeah,
so
the forecasting versus the back testing.
yes.
Okay.
And so quite frankly, to be honest, I've never back tested anything. And so I've got to work with Ben. And that was one of the things that he said, this is where he earns his money. I'm going to have to figure out how to work with him to do the back testing, because he said, you can do the back testing. I can show you how, and then include that. But I don't know if I'll include it in the document or if I'll include it as a supplemental document, so that once they've signed for the PPM and they're now doing their due diligence and they request the back tested documents, then I give them to them at that point in time. I'm not quite sure how to do that yet.
And show it as an
But-
example of how
Yes.
we're analyzing wherever the money gets placed.
Yes. Now,
Well-
there's that question that you brought up. And that is how do you, show that you're analyzing these to the standards that you're, hoping to apply to all your investment opportunities. Those are in your operating agreement. I don't know how many of you guys have looked at the Del Talk operating agreement, but, and it's out there. I've made that available, and I think Ben's made it available as well. But if you read the
Is it
Del
in the
Talk,
community, Mark?
I believe it is. I believe it is. And it might even be there might even be a copy of it in the classroom. I could be mistaken, but it's out there. And if not, we can make it available again. But in the Del Talk operating agreement, which I'm again swiping, they have a list or a set of criteria that every single investment opportunity has to pass muster with those criteria in order for them to say, we will invest in this or not. And obviously those criteria include risk-adjusted performance measures. And so as long as the investment hits those measurement criteria, it qualifies to be investment in your fund. Okay, and so Del Talk put that in their operating agreement because that's how they operate. And so that's what I did in our case as well. And in fact, I put the same criteria there because their operating agreement was inspired or swiped from Adagio, right? So that should answer another one of your
Ben
questions.
puts that in. I think Ben puts that in his too.
I believe so. I believe he does too. I don't know that I've seen one of Ben's, but I have seen Del Talks, and so I swiped that one.
And Ben has offered that we could use the ABL
Yes, absolutely.
information to put into our
Well, and
documents.
the reason I asked the question the way I did about the forecasting, because that's the way I used to do it. I'm
Yeah.
adjusting to the way it now needs to be done to satisfy the Adagio criteria, which is way better than anything I've ever seen.
So
You
yeah,
know, so,
to,
okay, good.
to your
Thank you.
point, Dwayne, you're touching on a step in the process that I have still yet to fully experience. So right now, I'm just focusing on getting our legal docs done, our pitch deck done. You're going to want to get a website done. Those are the things that you want to lay out because you've got to have the bucket ready to receive the cash, and you can't do that until you got all that part done.
Mhm.
Then the next step after that, so that would be my next step, is to sit down and go, okay, how do I actually analyze an investment opportunity? Because let's say we take our first million in, or maybe our first 15 to 20 million in for each of our funds. And what I'm going to propose that we do, and we probably will all do this just to keep it real easy, but the first 20 million will probably go all into Adagio structured products. In other words, you're lining your fund with your safety nets, right? You're putting all your safety nets in first. So take 15 to 20 million to put your safety nets in place. Now, once you get that $21st million in there, now that's the money you have free to invest however you want, so long as it meets your investment criteria. I have a little angel here behind me. So anyway, if that makes sense. So your investors wanting to do due diligence at that point in time, they're going to do all their due diligence on
Gotcha.
technically Adagio structured product. Okay. And they're going to go, oh yeah, this is really cool. Okay. Because they're going to meet Ben, they're going to talk to Ben and all that kind of stuff. He's going to give them all of the back test and historic data and all that kind of stuff. And they go great. Okay.
Mark, could you leave some available as cash for an opportunity that came up?
Absolutely. Absolutely. You could. I'm just throwing some numbers out there. Please don't take me
I'm just
completely literal.
thinking out loud.
Yeah.
because
Yeah. No, you
I
can,
like where
you
you're
can,
going though.
yeah. I mean, if you wanted to split it 50-50 from the first dollar in, go for it. It's that it'll just all sit there until you get enough money to get some GP stakes and some other things going, and that's okay.
Yeah, we got pitched on a GP today. They're only raising $1 million.
Mhm.
It's a syndication, but it's
Sure.
GP position.
So
but
yeah, I mean,
Need to
how
adopt
you,
some money.
again, all you got to do is set this up the way you want your fund to work. But the point is you've got plenty of investments to put the money into right up front, because you can line your fund with the safety nets first. And you can even tell your investors, we're going to put everything into the safety net structure first before we ever put a dollar at risk. Okay, so all your dollars are going to go into those the insurance wrap, the safety nets, everything, the alternative assets that's going to generate that protection and return for you. And then once we've got that set up, and you can decide how much that's going to be, because you're going to do your own asset allocation as the asset manager, then you can say, okay, now I'm ready. This next $1 million is going to go into whatever other fund you want to put it into. So if you want to put it into a micro lending fund in sub-Saharan Africa, go for it. If you want to, put it in something else, because you're a fund of funds, which means you can put it in real estate. You can put it in private equity. You can make it a hedge fund. You can do whatever.
The point that's really great about a comment you'd made earlier, either you or Dwayne, Mark, has to do with that insurance, let's call it that wrap, if you will. Because right now, the situation that I'm dealing with, which was separate from the domestic activities, is a particular country in Africa where a amount of land was allocated. Initially started at 10,000 hectares of land. It's now up over 100,000 hectares of land. And then now we've got 3 other countries that are in the same part of the continent that want to subscribe to the opportunity. And one of the specific areas that we are focusing on has to do with an asset. Let's call it a way for resources to move in and out of the country on water. Because of the ships that are used for either fuel or freight, there's a reality that those ships, when they're originally constructed, have a certain amount of carrying power, but nature dramatically reduces that efficacy by 40 or 50%. And we have a methodology of returning. So if an insurance company collects premiums to protect product being carried over the water, but now that particular infrastructure has been degraded, we have an ability to bring it back up to near full capacity, which means the insurance companies can return to the premium collection that they had been accustomed to. And that then brings them to the table to help to foster and facilitate regrading or upgrading those assets back to the original functionality.
Right.
So that means now that for funds that can be allocated to make that possible and maximize the GDP of the countries we are dealing in, there are all of these force multipliers that are possible as a result of that.
Oh, yeah.
Phrase that you used.
Yeah, that's fantastic. So that's the idea, guys. I just want to make sure that we're lighting a fire under ourselves, that we're not taking like I've taken, and Jody and I have taken months and months and months to get our heads around this, to figure out what we want to do, how to do it, and that kind of thing. I'm hoping to shorten that window of time so that you guys can take advantage of the months that we've spent trying to figure all life out, so that when we say, okay, let's just go for it, then we can all jump on board and do this. We're all doing this for ourselves, but we're not in it by ourselves. And so, like we've suggested in the past, reach out into the community, get to know some of these guys, get to know CJ, get to know some of these other guys, see if you want to build a team, see if there's some people that resonate with you and want to join your team. And that way you can spread the work over, 2 or 3 or 4 other people. You can take advantage of their knowledge base. And then once you've got the basic fund structure set up, then at that point in time, it's time to let Ben know, hey, my fund's up, we're ready, we've got everything happening. And, we're marketing it this way and we're doing that thing. And we've got our first 10 million looks like might be coming in. That's about the time he starts to get really excited and wants to help. And he'll jump in and start helping. The other thing that I would mention, and I know we've probably said it in this group before, but if you look like you think you have a minimum of $50 million on the line, let's say, Dwayne, you're looking at working with the state legislature in Louisiana, and you're going to get that pension fund possibly as an investor in your fund or partial investor, and there's $50 million that you're looking at. Ben will jump in and help you land that 50 million, and he won't charge up front. He might charge, his fees on the back end, but you're not going out of pocket up front on it. So, and he said in times past, if there's 50 million on the line, then I won't charge up front for, my fees. And so, here's some of the things that we can look at. Wow, what if we could get him into Armstrong? Okay, there's more than $50 million there. He's going to want to get that connection and look into that. And if we're all set up and ready to go and we're all working on Armstrong together, we're all going to get a piece of that into our respective funds.
He's actually developed a software program back in the 80s that was picking investments and asset classes, and the CIA wanted, and he would not give them the program, and they threw his ass in jail for like 5 years or something before they realized. But yeah, Martin, there's a movie on him called The Forecaster.
The Forecaster. Okay.
Yeah, and his when I send out I'll send his website. The guy is one of the most interesting men I've ever met in the financial world. And he's one of the world's head. I mean, he's advised Europe on Maggie, who was the woman that was the head of England for the premier of England?
Maggie Thatcher.
Maggie. Yeah, he was personal friends with her. He's advised the European Union. He gets called in on currency matters for advice. He used to be called by the CFR to interview presidents, and he said the last one he did was George Jr. And
I wonder if he knows Jim Rickards.
I'm sure he knows who he is. I mean, this guy knows the who's who of who.
Yeah.
And he's one of the most humble guys. I mean, he's just like, this is as it is. And anyway, it taught me a lot. That's the bottom line. We've had conversations over the years on different questions I've had. He sends back the answer personally. So as soon as I was able to start formally and properly representing Adagio, he was one of my first 3 calls.
Wow. Because you realize that Adagio is going to need all of our funds set up and ready to go with us as asset managers and fund managers to receive the kind of volume of investment.
I just want to get $1.98 first, then we can work on the rest. But yeah,
sure.
It's just, the potential is very huge. The world needs this. And more and more people are starting to realize it as they're watching our foundational institutions crumble before our eyes.
Yeah. So that's all I can say, guys, is get your funds set up, get it ready to go. It's like setting up a company, get everything set up so that all of your docs are ready to go. so that we can make sure, that Ben or Carl can make sure we're legally compliant, that in pulling the trigger on this, we're not going to fall flat on our face, and then sit back and get ready, or don't sit back, start marketing it, start working your network, because we're going to find this stuff. We're going to need each other.
And I know that you might not have a number yet, but you've got my email address. So when you are ready for the enrollment in the DFY solution, please let me know.
Yeah, absolutely.
I'm happy that you're already sharing some of the document, but because I've got time challenges and straddling time,
Don't we all?
I'm just looking forward to being able to engage your services.
Yeah, happy to do it. Happy to do it. Okay. Anybody? Oh, sorry, Jody. I'm going to get back to you. I've kind of hijacked you again. Sorry. Bad habit.
Oh, no, it's fine. This is great. This is what the lab's all about, right? Well, how does everyone feel? Are we all wrapped up and we'll be ready to report some fun stuff on the next meeting? And if anyone has any ideas of things that we'd like to share or go over, if we want to have people in here with us or whatever, if we can work that out, if I can get Carl or Ben or whatever. Oren. Yeah, that'd be awesome.
Yeah. Carl has already been assigned to be here every week. So we should have Carl here telling us that we're going off the deep end somewhere.
Jody, also you've got my email address, so I'm very interested in learning more about the educational framework that you're using and what you're supporting. There was a wonderful gentleman who I had the pleasure of meeting who's no longer with us. He was at Providence College and he did some great work. So I don't want to speak to it if it's not relevant, but around this educational detail that you're putting in place, if there is synergy, then I am reaching out to Providence College to have his work that he had started completed. It's basically K to 12.
I would love it too. I would love it too, John, because I'm finishing up. Oh, is it Providence College?
That's what. No, he was saying the work that his friend was doing.
Oh, it was K-12. Yeah.
It was K-12 in a box, and then they did K to 16 beyond that.
Okay, I definitely want that.
Yes.
I'm going to be teaching at North Central Missouri College, and I want them to basically become one of the leading promulgators of this philosophy of finance and the financial system, and teaching my students how to set up and raise funds and run funds and do the social entrepreneur kind of thing through the fundraising mechanisms that we're talking about in some of the third world countries and things like that. Because not only can they have a stellar career, but as entrepreneurs, they can now be, more successful and wealthy beyond their wildest dreams, and at the same time doing good in the world. And you can actually make good money and become wealthy doing good instead of doing selfish things. And so I'd like to partner with any educational institution that has programs geared toward that, so we can partner as educational institutions, number one, but number two, swipe each other's programs.
Mark, are you talking about the third world country of Detroit?
That too. I was thinking specifically of Flint, but yes.
And I'm down here in New Orleans. We need it down here so bad it's not even funny.
Well, we do have third world countries right here in the lower 48. I'm thinking of, a lot of our Native American brothers and sisters. How would it be to have a micro lending fund for the Native American population here just in the United States to help them, advance? I know a lot of these tribes get a lot of federal money, and all they do is divide it up into welfare checks for everybody and they go drink it away. What if we had funds available to sit down and maybe do a shared fundraising so that we could match it with federal funds, and now we actually do things that would allow them to, I don't know, provide some good economic development besides casinos. I don't know.
Or
that's
make them
Yeah.
not reliant on the government at all.
Or maybe not relying on the
Yeah.
government at all. Yeah.
Well, that's one of the reasons why the former rules chairman had, before his session closed out, had the Cherokee Nation hearing.
Mhm.
Okay, I can't go into details around that, but obviously, you know, there are gap opportunities there
Mhm.
for us to be able to harness in a very powerful way. So the case study is being done offshore, but there is indeed both Native American and First Nation corollaries that we are looking at. And as
The
you said,
opportunities for us, like you say, John, the opportunities for us to do social entrepreneurialism are endless, endless. And if we can structure these funds so that our European investors or other wealthy investors, our high net worth individuals are able to invest in these funds, get awesome hedge fund rate returns, and yet their dollars are invested now in helping people move ahead in life. You've just hit the holy grail, because they now feel
Yeah.
good about their investment. You know, it's kind of like what BlackRock is trying to do. They're trying to get companies to invest in things that will benefit the environment, but they're going about it all wrong. They're, instead of taking it from a stewardship perspective, they're doing it from a force perspective. You know, and we can say, look, you know, we're here helping people, and they're going to go, wow, that feels so good. Let me put my $1 million in your fund. Let me put my $1 billion in your fund. Because not only are we making a great return, but now we're helping, you know, people that need it. It's a cause that you can get just about everybody behind you on. But, you know, we're all going to have different causes, different social entrepreneurial opportunities. John's going to be working in Africa. Maybe I'm going to be working with Native Americans. Somebody's going to be in Malaysia or, you know, Asia or other places around the world. But that's what this can do. And so I'm just trying to inspire you guys.
Have any of you guys, you or Ben or anybody in that is this technical gurus, come up, if somebody want, I'm just going to pull numbers out, you want to put $1 million into a fund, what percentage of that $1 million needs to be in the assurance side where you're getting the Adagio returns, but then what split can go into like the education or the social benefit and still maintain an 8 or 10 or 9%, 10% ROI to the investor, and get maybe some tax credits or something from the social, you know, from the educational or green or whatever.
Yeah, it's going to
Has
vary
that
from
been
fund to
worked out on-
fund.
Well,
Yeah.
and
Go ahead,
I
Jody.
think how Mark and I were looking at it was, and I, correct me if I'm wrong, Mark, because I don't want to speak for you, but we were kind of looking at it more from the perspective of the management fees coming out of our part of the fund. So it wouldn't even impact the investor, if that makes sense.
That's a good
I don't,
possibility as
is
well.
Marcus, I mean, Ben's saying he's making upwards of 50%. So let's say it's just 30% in 2022.
Mhm.
So if you're making 30% on $1 million, you don't need to put the full $1 million to make 15 or 18% and still look the tail off the S&P or
Yeah,
the real estate or anything else.
Absolutely.
There's a percentage there
Well, and that's why,
can be allocated for a general conversation as an intro conversation to an potential investor that actually says that we're aiming for a 12% return on your money, and by going into the Adagio, and then the upside is if he does hit 30, they get a higher percentage. But now we're going to take a percentage of your $1 million, Mr. Investor, and look at potential new market tax credits or small SBICs sort of thing that we're controlling the SBIC.
Mhm.
So,
So the short answer to your
there's got to
question,
be a
sorry.
split out somewhere in there that's conversationally legitimate.
Okay. So the short
Well, and
answer to
we
your
were-
question is
go ahead,
that
Mark.
it's going to be whatever you as an asset manager want to do. It's going to be based on your own waterfall, and what you think the people investing in your fund are going to require for them to be able to invest, to want to invest, right? It's almost a marketing decision. But I've been researching this by looking at some other funds that offer these safety net systems and insurance wraps. And I've always figured that we were probably looking at 40 to 60 cents on the dollar going into these safety net investments, Adagio structured products. The funds that I've seen so far actually split the baby right down 50-50. And they put 50 cents for every dollar that comes into the safety net structure. This is your alternative assets with Adagio. And then 50 cents is available now to invest in whatever other funds you want to invest in, or whatever other investments you want to invest in. So when you start to put the math together on that, let's say Adagio can get 30% a year on average, okay? They have a really good year and do 50%, but they have less than a good year and do 25. Okay, so let's say they average 30%. Well, if 50% of your fund is averaging 30% a year, okay, and the other 50%, let's say you're just doing mediocre. Let's say you're just doing 20%. Okay, so the other 50% is doing 20%. Well, you can do the math on that and see that you're averaging 25% a year. Okay. And so on that basis, build your waterfall, and you can now decide what you want to do. Now, to one point, you can say, all right, we're going to pay our investors 20% because 25% is the gross earnings on the fund, I should say. Based on your waterfall, they may get 16, 18% of that, or 18% points. And your fund is getting the other 20%, right, of the earnings.
Yeah.
Okay, that's good. Now, did you invest in social entrepreneurialism with that other 50 cents besides the safety net? Great, you've just benefited and done a great service to the world, right? Do you want to take some of your profit that you're taking, say you take 20% of that 25% average, so that's 5 points, and you say, you know what, I don't need, so Toby's cranking out some numbers there, guys, so you can look at those. But in other words, you've got another 5 million. Take that in as just your profit and leave, and keep it, or do you turn around and use that to donate or contribute to worthy causes, after taking for yourself a generous salary or something like that? That's totally up to you how you want to do that. So you got to play with those numbers. This is all about building your waterfall. I've got some video out there in the community that talks about how to do a waterfall. Everybody's going to do one with their fund. So just decide, what that's going to be. It's got to be in writing. It's got to be in your PPM. It's got to be in your subscription agreement and things like that. But, decide what that's going to be and then put it in there. And I'll make sure that in our subscription documents and in our PPM documents that we have a section called waterfall, so that you can document what you want your waterfall to be. But anyway, that's going to be totally up to you. But does that give you an idea, Dwayne?
It gives an idea. Yeah, I was just looking if there was like some sort of standardized something or other, but you've answered it. No.
Yeah, what I've seen
Just
somewhere is around
individual.
50%.
Okay. All right. Got it.
But you can certainly lean one
I
way or
was
the other.
checking my math. I was checking my math just to make sure I wasn't missing something.
Okay.
I always like to do that.
So
Thank you.
I gotta just say this month, and maybe we'll end on this, and I don't want this to sound like hyperbole, but there is a GP stakes program that Ben put together where the return is so stinking high. We're talking triple digits, guys. It's going to almost make your waterfall absurd. Okay.
Yeah, you don't need to worry about the return.
You do not have to
Right.
worry about, basically, if you put 50 cents on the dollar into those structured products that are getting those kinds of returns, you could almost pick total losers
Still be okay.
and still be good. Okay. Not that you would pick total losers because you're going to go through the whole risk adjusted performance process. You're going to be picking winners. But I'm just saying the returns are so high that you're actually going to want to cap what you want to pay those investors so that you have additional funds available to invest in some of these types of projects.
The thing with the big money, their first concern is not the return, it's the safety and security.
Mhm.
And so you want to under promise and over deliver anyway. So
Right. That's why I hesitate to say this, but I just
Yeah.
wanted to put that seed in your mind. Get your fund set up, guys. This thing is going to get big real fast.
and it can actually work against you if you say too high of a return, because then they think, oh, it's
Yes.
either risky or you're just trying to get my money.
Yep,
Yep.
that's right. So that's why I would never say that to an investor. I'm going to say it to my
No.
buddies here to inspire you to get your funds set up. Okay. And to inspire you to be okay with putting maybe as much as 50 cents on the dollar into the structured product to protect as the safety net for your investors. But then just know that they're going to be okay and be confident in that.
It's exciting. Very exciting. While I've mentioned international activities, there's other things that I have been doing domestically, which I'll speak about on the next lab. That'll be real fun. There's a Valentine's Day overlay on it. It's a cause marketing overlay, and a focus on libraries and the top 100 media markets. And so we'll have some good stuff to talk about because
Sounds
obviously-
great. I'm looking forward to it.
Yeah, me too.
Thank
Well,
you so
look,
much.
Thank you guys so much for
Yeah.
joining, and thank you, Mark, and we'll see you guys next week.
Happy to do all the damage I can.
Here, here. All
Have a
right, see
good
y'all
night,
later.
guys.
Thanks.
We'll see you guys. Have a great week.
You
Bye.
too. Bye-bye.
Bye.